You're listening to Insights with Philip Wilson, where the discussion focuses on how to maximize Social Security benefits. Considering there are 567 ways to file and 3,000 rules for filing, it's no wonder that 90% of those who file for Social Security do not receive their maximum benefits. Listen in as Philip Wilson, who is certified in Social Security claiming strategies, outlines what you need to know to get the most from your Social Security benefits.
Welcome to the show. Today I want to continue our discussion of the most important financial decision that you will make in your lifetime. We've been talking about this in recent weeks. It's a decision that 90% of the population does not make correctly. 9 out of 10 people listening to this program right now have not or will not make the correct financial decision. We've been talking about some of the reasons why. The biggest reason is that people are not informed. There's a tremendous amount of complexity to this decision. There's a tremendous amount of information that you will need to make the correct decision. This is the biggest reason why I'm doing this radio show. It's the biggest reason why I teach seminars. Every week you're going to find me somewhere talking about this subject. Some venue, a library, a civic center, an employer, somewhere talking about this. I spend an awful lot of time every week doing it. It's very, very important to me. I'm out a lot at night. I'm away from my family a good bit. And it's important to me to inform the public because there's very few resources available to help make this decision. There's very few resources that are actually a help. What are resources are not really resources. People think they're getting help, but they're not really getting help. And probably the single biggest reason why so many mistakes are made is because the average person is just not aware of the importance of the decision. Most people don't realize they need to go to a seminar. They need to listen to a show like this. They just don't know what they don't know. The decision of when and how you file for your Social Security is the most important financial decision that you will make in your lifetime. The decision of when and how you file for Social Security. Studies have shown that over 90% of people filing for Social Security do not receive their maximum benefit. 9 out of 10 people go through their entire life paying into the system, money taken out of their paycheck, whether they want to have that money taken out or not. They pay into the Social Security system, they get to retirement, they file for their benefits, they do not receive their maximum benefit that's available to them. How does that happen? Well, my goal over the last few weeks is to teach you how to maximize your Social Security benefit. We've been talking about a lot of different strategies involved with that, a lot of different situations that you have an opportunity to leave money on the table. But in general, what I want to do first, though, is revisit why this is such an important decision. Social Security, and when you file for Social Security, probably isn't ever really occurred to you as such an important decision. Most people think it's a pretty simple one, actually. It's not. One of the things that I mentioned in the previous weeks is the importance of income streams for life. Income streams for life. Streams of income that you cannot outlive. As long as you're alive, they're there. As long as you have a pulse, they're there. If you don't have a pulse, they're not there. So regardless of whether you live to be 75, 85, 105, 125, there's a source of income that you have. This is just so important now, probably more than ever in history. We are the first generation going through retirement that will spend more years in retirement than working. That's never happened before. There's all types of problems associated with this new situation. But the biggest thing is that most people are just not prepared. I meet with very few people every week that are prepared for this. Most people just don't have enough. They have not saved enough, and they're not going to save enough. They're not going to save enough to live a long life in retirement. They've gotten the kids out of school. They paid things off. They paid for the wedding. Now they're focused on retirement, but they're going to run out of time. I do meet with people who have substantial assets. They feel like they have enough for retirement, but they really don't. Because if something were to go wrong, they would be in trouble. With medical advances these days, most people are going to become frail at some point in their life. They're going to probably lose a spouse. They're probably going to need care. various things can go wrong in retirement that make most people unprepared for retirement. So income streams for life are just so important because a lot of people going into retirement right now are likely to outlive their assets, especially if they have a long life in retirement. Social Security is the largest source of income that we have, most of us have. Very few of us have pensions, which would be the other situation that we would have something like that. Very few people have pensions. So Social Security is it. It is the largest source of income stream that most people have. So that's why I believe that the decision of when and how you file for Social Security is the most important financial decision that you will make in your lifetime. It's also, studies have shown that over 90% of people filing for Social Security do not receive their maximum benefit. How in the world does that happen? Well, we've been talking about this. There's over 3,000 Social Security rules associated with filing. Most people don't know that. Most people think there's maybe one decision that needs to be made, and that's what age you file for Social Security. There are 3,000 rules associated with it. There's over 500 different ways that you can file for Social Security. In fact, there's 567 ways. Most people are not aware of this. They're not aware of the need for the advice. They're not aware of the complexity. Most people feel like that they're going to get the information they need from the Social Security office. This is a big reason why people make mistakes. The Social Security office is not there to provide you advice. They're there to process your paperwork. They're there to help you make a decision, determine your eligibility, but they're not there to plan your life. Most people go into the Social Security office thinking they're going to get more advice than they really do. They come out surprised if they didn't find out something. The Social Security office is not there to provide you advice. The employees are told not to do that. Now, I've had good experience with the Social Security office. I think of all the government entities, they're the best entity in terms of customer service. Most of the people that I come in contact with are very conscientious. They want to do a good job for you. They want to help you. But they're not there to help you get planning advice. Most people mistakenly think that's the case. And the analogy that I always like to use in my seminars is that you don't go to the IRS to file your tax returns. If you need help to file your tax return, if you need planning help, you go to an accountant or you learn the rules. Most people go into the Social Security office thinking they're going to get the help that they should. They're not. And then probably another reason why there's so much confusion and mistakes in this area is because advisors in general are not trained for this. Most advisors are not aware of the Social Security rules. This is a very unique area of planning in our industry. This is also an area very early in my career I knew nothing about. I never had a class to teach me on this. It was all self-taught. It was nothing more than getting on Amazon, finding books, teaching the rules to myself. In recent years, there's been some certifications, there's been some associations, there's some various ways for us to keep up with the changes, the rules, but back in the old days, there was no information. I find very few advisors know anything about Social Security. Although their clients might go to them for help, they know very little about the rules, they know very little about this, the filing strategies associated with it, and so there's an awful lot of mistakes that are made just because of that. The last few weeks, we've been talking about some different situations in life that lead to filing strategies. One situation was for a spousal benefit. Spousal benefits was a unique way that we file for increased income from Social Security for married couples. We also talked about divorce benefits. Today, I want to talk about widow benefits. I will in the next week review some of these areas. If you're not aware, if you were not able to be a part of the show at those times, I will have an opportunity for you to listen to those things again and learn those rules. But in general, I just want to set up today's discussion just by helping you understand the importance of the stream of income. It is absolutely vital that everyone going into retirement file the correct way so that they maximize the retirement income associated with Social Security. It's just an enormous mistake. Now, I mentioned a few weeks ago that most of these filing strategies have to do with situations in life. They have to do with what things have happened to you. For example, have you been divorced? Are you married? Are you single? Today, I want to talk about being a widow. Widow benefits are not quite as misunderstood as regular benefits associated with spousal benefits or divorce benefits. One of the things that I mentioned is that those types of filing strategies are not mentioned on your earnings and benefit statements. Most people are not even aware of it because there's no mention of this, of those types of strategies. You have to know about them. You have to know that you can file for them. You have to know that you're eligible for them. Widow benefits are a little bit different. There's not so many mistakes that are made with widow benefits like there are in some of these other strategies. Widow benefits are on your earnings and benefit statement. Most people are aware of that. So in addition to providing what your Social Security benefit is for you at different ages, it generally will provide what your disability benefit is or what your widow benefit would be if something were to happen to you. So widow benefits there's not quite as many mistakes, but there are some individual mistakes that people make with this particular benefit. In general, someone is eligible for a widow benefit if they've been married for 9 months or more. If you've been married for 9 months or more, you have the opportunity, if you lose a spouse, to file on the widow benefit associated with that deceased person. There are exceptions to the 9 months. Most of the time, the people that I meet with have been married for a number of years before they're faced with this type of situation, but it's important to note that there are some exceptions associated with this. You don't necessarily have to be married for 9 months in order to be eligible for a widow benefit. There's exceptions to that. There's a military exception if someone was on active duty. There's also an exception if someone is hurt in an accident, is killed in an accident. So the 9 months isn't necessarily hard and fast. But like I said, most people that I talk to, that really isn't even an issue anyway. Most everybody's eligible for a widow benefit because they've been married for more than 9 months. But let's take a break there. We're going to come back, finish this discussion after the break. Welcome back. Let's continue our discussion of the widow benefit. Widow benefits in general are Social Security benefits that are available to surviving spouses. If someone were to lose a spouse and they qualify for a widow benefit, which means they've been married for 9 months or more, with some exceptions, which I noted before, they are eligible for a widow benefit, which means they have the opportunity to file on the earnings record of the deceased as opposed to their own. This is a situation where there would be a greater benefit under the widow benefit than their own benefit. That's the main reason why someone would do this. Most of the time we're talking about women who've stayed home to raise children, women who have sacrificed their income, their future benefit. They lose their husband, they're going to be better off filing for the Social Security benefit on their late husband than they are on their own. So the widow benefit is mainly there to protect someone against a low Social Security benefit, and it allows us to file on the earnings record of someone else. Very similar to the spousal benefit and the divorce benefit, what we've been talking about. In fact, most of these planning strategies, the biggest mistakes that people make is that they're not realizing that there's actually another way to receive Social Security benefit that is not based on their own record. So the spousal benefit is where you file on the record of your spouse. The divorce benefit would be that you file on the record of your ex. And a widow benefit would be that you file on the record of the deceased spouse. All of those situations are such that they're a benefit if those benefits are actually greater than filing on your own benefit based on your own work history. So those are, in general, why we would use these types of strategies. So if you've been married for 9 months or more, you qualify for this. Now, the biggest questions that I receive generally at my seminars regarding widow benefits, where the most of the confusion is not so much whether or not someone is eligible for it. And it's not so much whether or not it's a benefit for them. It's what happens if they get remarried. That's the most common question that I receive regarding widow benefits. And there's some unusual rules which I want to cover with you. Now, I mentioned before that the divorce benefit is available if you're single. Last week when we talked about that, I said if you were remarried, you're going to lose your widow benefit, your divorce benefit. With a widow benefit, if you get remarried, that's not necessarily true. You could lose it, you may not lose it. The rule for the Social Security Administration is that if you are remarried earlier than age 60, or if you're remarried after age 60, it determines whether or not you're eligible for a widow benefit. If you get remarried before age 60, you're not. In that situation, you would fall into the normal rules associated with married couples, such as the spousal benefit. So in that situation, you would be able to file under your current spouse, the new spouse, going forward, or in your own record, just like the spousal benefits that we talked about a few weeks back. If you get remarried after age 60, you actually have a choice. You can file on your new spouse, you could also file on the widow benefit, or you could file on your own record. You have to know which one would be the beneficial way to go. And the easiest way to think about this is it pretty much all comes down to earnings history. And a very simple example would be that if you were married to a brain surgeon and the brain surgeon passed away and you got remarried to a teacher, you're probably going to find out that the widow benefit is the way to go. And if the reverse of that was true, and you were married to a teacher and then you were remarried to a brain surgeon, you're probably going to find that the spousal benefit is the way to go. It's all going to come down to the earnings history of the person, whether it's the deceased or whether it's the remarried income history. But if you're remarried after age 60, you have the ability to file in all those different situations. A lot of people don't realize that. Again, they think that either because they're remarried, they don't have a widow benefit, or they think that their own benefit is all that's available to them. And that's just not correct. If you have more than one late husband or wife, you actually could file on the higher of the two. This is very similar to what we talked about with divorce benefits, where if you have more than one ex and you qualify under the rules, which was the 10 years or more of marriage, you actually can pick the higher of the two. Same with the widow benefit. If you were married for 9 months or more, the person passed away, and you're still eligible for a widow benefit, meaning that you were married after age 60, and then they passed away, you would actually be able to choose the higher of the two. So you could look at their earnings history to determine what would be the better way to go. That's also an often overlooked situation. One other area that common mistakes are made are with the divorced widow benefits. And I didn't really cover divorced widow benefits. I just covered last week divorce benefits in general. But a divorced widow benefit, there's two types of divorce benefits. There's a divorce benefit if you're alive. There's a divorce benefit if the ex is alive. There's a divorce widow benefit if the ex has passed away. And the amounts that you receive are different. The divorce benefit in general, like we talked about last week, is 50% of whatever the ex makes at full retirement age. So whatever they would be receiving at full retirement age, the divorce benefit is 1/2 of that. A divorce widow benefit is 100% of whatever they would be receiving at full retirement age. So we see a lot of situations where someone is receiving a divorce benefit for a number of years. The person passes away, well, they can refile then for a widow benefit, a survivor benefit, and their Social Security income would double. That's just another situation the Social Security Administration is not necessarily is not going to notify you to let you know that you can do that. That's something that you have to know that you're eligible for, so you can refile for that widow benefit. So a divorced widow benefit, very similar to a widow benefit, is 100% of whatever the person would have been receiving at full retirement age if they passed away before receiving Social Security, or whatever they were receiving when they passed away if they are receiving Social Security. So let me say that again. I didn't say it very well. If someone is receiving Social Security, a survivor will continue to receive whatever they were receiving when they pass away. If they were not receiving Social Security, you're going to receive whatever they would have received at full retirement age. Very, very important distinction there. It doesn't, even if this is where we're going to lead into next week, when we're going to talk about what age to file for Social Security. In 2 weeks, we're going to talk about what age to file for Social Security. And this is a very big theme of that show. And that is that whatever the person was receiving at the time they pass away becomes the survivor benefit. And I'm going to talk about this at great length as far as what age you should file for Social Security. But the survivor benefit, whether it's a divorce benefit or a regular widow benefit, is 100% of whatever the person would receive at full retirement age or whatever they were earning at the time of their death. Very, very important that you understand that. So the other issues, remarried after age 60, remarried before age 60, determining your eligibility. One final area that I want to cover, we talked a little bit in past weeks about deemed filing. And just to reiterate that, deemed filing is a situation that came out of 2015 when they changed the rules. And what the deemed filing rules were is the standard going forward, and that's basically that you cannot pick and choose your Social Security benefits. Once you file for Social Security, that's it. So you don't really have the ability to receive a benefit a certain way and then turn around and receive another benefit another way. They came up with these deemed filing rules, and what deemed filing said is that you're only eligible to receive one benefit at one time, and you don't really have the ability to pick and choose anything anymore. Now, we've been talking about some exceptions to that, and one exception that I mentioned a few weeks back for married couples was if you were born before 1954. You had the opportunity to receive a spousal benefit and then come back and receive your own benefit at age 70. Very, very important technique for those that qualify for that. And then with divorce strategies, I also mentioned an exception to divorce benefits, that if you were born before 1954 and you waited until your full retirement age to file for divorce benefits, then you would also have the right to come back at age 70 and file for your own benefit. So you could receive that divorce benefit for several years and then come back and receive the higher benefit at age 70 with the increases the Social Security Administration make with delayed retirement credits. Very, very important. So those are two strategies that are extremely important, one for marrieds, one for divorces. Well, there's actually a third exception to the deemed filing rules, and that's actually for widow benefits. There are actually no deemed filing requirements ever for Social Security benefits. And what that basically means, in contrast to married couples or divorced couples, you don't even have to be born before 1954. There's no deemed filing rules ever for survivor benefits. So someone can actually file for survivor benefits as early as age 60 and receive them while still coming back at age 70 and filing for their own benefit. And this does happen a lot. We do see situations where maybe in an accident something unexpected has happened. We just need to get income in. We will file for Social Security. The person, as part of the plan, will go back to work and begin to work on their own benefit together with the increases the Social Security Administration make between full retirement age and age 70, the 8% per year. And that's a very, very effective way to do it. So there's no deemed filing rules for survivor benefits ever. You don't have to be born before 1954 like you would with a spousal benefit and married couples or with a divorce benefit. You can file for a survivor benefit any time and still have the right to come back and file for your own benefit at age 70. The ability to do that, though, is very similar to the other two strategies that we talked about, the other two exceptions, and that is the restricted application exceptions. We talked about that you have to file a certain way with the Social Security Administration to restrict your benefits. And with a restricted application, you're actually telling the Social Security Administration that you only want one type of benefit, even though you're eligible for more than one. So with the married couples, you would actually file for a spousal benefit and restrict it only to that. And then you would come back and file for your own benefit later. Same thing with the divorce benefit. You would restrict it only to divorce benefits, then come back and get your own benefit later. Same strategy with a widow benefit. You would file for the widow benefits only and tell the Social Security Administration that you want to do that, and then you would come back and file for your own benefits later. But that pretty much completes the discussion of the widow benefits. I do want to mention very quickly next week I'm going to review all the strategies that we've been talking about. I'm obviously not going to be able to go into great detail, as much detail as each individual show, but I just want to introduce you to all the different concepts again, and we will go back over that so you can look for additional information. It's good to be with you, and have a good week.
You've been listening to Insights with Philip Wilson, an Alabama registered investment advisor. Learn more by visiting his website at ssmistakes.com or by calling 205-868-9297.